Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, December 31st, 2025, and here is everything you need to know as the markets close for today. And what a perfect way to wrap up 2025, with some fresh New Year vibes coming in just hours from now. Happy New Year to all our listeners. Let's dive right into what moved the market today. In a strong finish to the final trading day of 2025, Indian equity markets rallied on value buying amid thin year-end volumes. The BSE Sensex surged 545 points, or 0.64%, to close at 85,220. The NSE Nifty 50 advanced 191 points, or 0.74%, settling at 26,130. The Nifty Bank index was equally robust, climbing 410 points, or 0.69%, to finish at 59,582. The broader markets also participated with vigor. The midcap index jumped 1% and the small cap surged 1.19%, suggesting healthy participation across the market spectrum. The overall sentiment was constructive, with investors hunting for value in selected pockets despite persistent foreign fund outflows throughout the year. For context, India's equity markets delivered around 8 to 10% gains for calendar year 2025, a slowdown from prior year trends, largely on the back of 1,66,000 crore rupees in foreign portfolio investor selling. From a currency perspective, the Indian rupee closed at approximately 89.86 against the dollar, reflecting the ongoing pressure on emerging market currencies. The rupee had touched an all-time high of 91.38 earlier in December, underscoring the volatility in forex markets driven by divergent monetary policy stances and geopolitical concerns that have gripped markets globally. Turning to today's top movers, JSW Steel emerged as the clear champion, rallying nearly 5% after the government announced safeguard duties on steel imports, providing a visible earnings boost for domestic steel producers. ONGC gained over 2.46% on expectations of stable oil demand and stronger refining margins. Tata Steel followed with a 2.35% jump. Kotak Mahindra Bank and Reliance Industries each added more than 2%, reflecting strong buying in select banking and energy heavyweight names. In contrast, the information technology sector came under pressure. Tata Consultancy Services stumbled 1.13%, while Tech Mahindra and Infosys each lost over 0.6%, extending the ongoing weakness in software stocks amid global cautionary sentiment. Bajaj Finance also slipped 0.28% despite overall banking strength. From a technical standpoint, the Nifty approached the upper edge of its consolidation range at 26,200. The intraday high touched 26,187, a level that has been acting as a resistance zone. Support for tomorrow's session is placed around 26,080, followed by a more substantial support zone at 25,800. For the Bank Nifty, the index formed a bullish candle with a minor upper shadow, suggesting positive follow-through potential. The immediate resistance is now at 59,800, while support sits at 59,400. The metals sector was the star performer in December, delivering approximately 5% returns and emerging as the strongest sector today. The announcement of steel tariffs amplified bullish momentum in the space. The oil and gas sector also outperformed on anticipated stable global demand and refining margin expansion. Conversely, the IT sector endured its toughest period, declining nearly 3% in December, highlighting cautious sentiment toward technology stocks amid global trade uncertainties and potential tariff headwinds. On the regulatory front, SEBI continues its comprehensive reforms of the capital markets framework. The regulator has already approved new stockbrokers regulations and mutual funds regulations, both replacing long-standing frameworks from the 90s and early 2000s. These reforms introduce risk-based supervision, clearer fund segregation rules, and standardized offer document summaries for IPOs, all designed to reduce regulatory complexity and improve cost efficiency for market participants. The government also announced safeguard duties on select steel imports at 12% in the first year, declining over subsequent years, providing meaningful tariff protection for the domestic steel sector. In the commodity space, gold prices continued their remarkable winning streak, with MCX Gold February futures closing at 1,36,124 rupees per 10 grams, down 0.4% on the day. Silver, however, experienced sharp profit booking and corrected sharply by 6% to settle at 2,35,952 rupees per kilogram. This pullback came after silver soared to 22,62,000 per kilogram just days earlier on December 27. It's important to note that despite the late month correction, gold delivered its strongest annual performance since 1979, while silver notched up a record yearly gain of over 157% for calendar 2025, making both metals stellar performers. Crude oil faced modest headwinds, closing around $57.95 per barrel, reflecting balanced supply-demand dynamics and cautious year-end sentiment. From a geopolitical perspective, global tensions remain elevated with China's military drills around Taiwan, the Middle East, flaring up with the Saudi-led airstrike in Yemen, and ongoing sanctions on Iranian entities creating uncertainty. These developments have supported safe haven assets like gold and kept volatility elevated in currency and emerging market equity spaces. Additionally, the U.S. Federal Reserve's meeting minutes revealed a divided stance on recent rate cuts, fueling uncertainty about the monetary policy trajectory into 2026 and keeping forex markets choppy. Looking ahead to the January series and tomorrow's trade, the technical setup favors a cautious optimism. A decisive breakout above 26,200 on the Nifty could trigger the next leg of upward momentum, potentially opening the path toward 26,300 to 500. However, failure to break above this resistance band may invite renewed profit-taking, potentially dragging the index back toward 25,800 to 900. For the Bank Nifty, the formation of a bullish candle suggests positive momentum, and a push above 59,800 could set up moves towards 60,000. The immediate scenario suggests range-bound trading with a positive bias, contingent on foreign investor participation and fresh economic triggers. January has historically delivered mixed returns for bank stocks, averaging slightly negative performance, so selective stock picking will be crucial. Here's your actionable takeaway for tomorrow. The government's announcement of steel tariffs has created a structural demand catalyst for metal stocks. JSW Steel, Tata Steel and Hindustan Copper remain attractive on dips, especially if the Nifty holds above 26,080. Conversely, IT remains under pressure until global sentiment shifts, so cash is a position here for now. Set your stop losses strictly at support levels and stay disciplined as we enter the January series with fresh trading momentum. That wraps up today's market coverage. The year 2025 ends on a measured note with Indian markets rallying in a thin year-end session. But the broader picture remains one of cautious optimism, layered with external headwinds. Send in your questions and market observations to our studio, and join us tomorrow morning for a comprehensive wrap-up of global overnight moves and the January series opening bell. Stay tuned, stay invested smartly, and here's to a prosperous and profitable 2026 ahead. This is Prem signing off. Happy New Year.